What happens? If the U.S. freezes China's assets, imagine waking up one morning to breaking news. The United States has just frozen hundreds of billions of dollars in Chinese assets. The Chinese government's U.S. Treasury holdings? Blocked. Bank reserves? Seized. Financial ties? Severed. Instantly. It would be the most aggressive financial move in modern history, and it would set off a global economic shockwave. But how likely is it to happen? What would it mean for China, for the U.S., for the global economy? In this video, we're going deep. Let's break down what happens if the U.S. actually pulls the trigger and freezes China's assets. Chapter 1. What assets are we talking about? Let's start with the basics. What exactly are Chinese assets in the U.S.? At the top of the list, U.S. Treasury securities, basically government debt. China holds around $775 billion in U.S. bonds, once over $1 trillion. Why? Because it's been a reliable place to park surplus dollars from trade. It also includes Chinese state-owned company funds in U.S. banks, property and real estate, equity stakes in U.S. companies, U.S. dollar reserves held by Chinese institutions. Altogether, this represents a financial bridge between the world's two largest economies. Freezing those assets would mean cutting that bridge overnight. Chapter 2. Why would the U.S. even do this? This isn't just a wild idea. The U.S. has done it before, with Russia, Iran, and Afghanistan. In 2022, after Russia invaded Ukraine, the U.S. froze $300 billion of Russian central bank assets. It was a powerful signal. Invade a country, and you'll lose access to your money. So now imagine a scenario where China invades Taiwan, supports an adversary militarily, gets caught cyber-attacking U.S. infrastructure, escalates trade retaliation or sanctions. In any of these situations, freezing Chinese assets could be used as a financial weapon without firing a shot. Chapter 3. What happens to China? If the U.S. freezes Chinese assets, it would be a massive financial blow. First, China would lose access to its dollar reserves. That would make it harder to stabilize its currency, the yuan, during times of stress. Second, it would signal to other countries that their money isn't safe in the U.S. That could trigger a flight from the dollar, or at least a rethink of dollar dominance. Third, China could see capital flight intensify. Wealthy individuals and companies would rush to move their money out of China before getting stuck. But here's the catch. China has been preparing for this by reducing its holdings of U.S. debt, building alternative payment systems, stockpiling gold and strategic reserves, launching the digital yuan. But no matter what, losing access to U.S. financial markets would hurt badly. Chapter 4. What happens to the U.S.? It's not one-sided. The U.S. would also take a hit. Here's how. Markets would panic. Investors hate instability. Interest rates could rise if China retaliates by selling off U.S. bonds. U.S. companies doing business in China could be nationalized or banned. Global trade could seize up if trust breaks down between major players. But the U.S. also holds the ultimate advantage. The dollar is still the world's reserve currency. Over 80% of global trade is settled in dollars. Most countries don't want to leave the U.S. system. They rely on it. So while there'd be blowback, the U.S. might still have the upper hand. Chapter 5. Could this actually happen? The short answer? Yes, but only in extreme situations. Freezing assets is the nuclear option in finance. It's not used lightly, because it signals total breakdown. But if war breaks out over Taiwan, or the U.S.-China rivalry turns into open hostility, then freezing assets becomes a real possibility. And once trust is gone, there's no going back. Final thoughts. Freezing China's assets would change the world, not just for banks, not just for investors, but for everyday people through supply chains, interest rates, and geopolitical uncertainty. It would accelerate the divide between East and West, force countries to choose sides, and potentially rewrite the rules of global finance. That's why this isn't just about money. It's about power, trust, and control. So if you hear talk of asset freezes, don't ignore it. It could be the opening move in a whole new kind of war. Thanks for watching Finance Related 101. If you found this helpful, hit that like button and subscribe for more global economic breakdowns. And drop a comment. Do you think the U.S. would ever go this far? Or would it backfire? Let's talk about it.